started now. I want to give a disclaimer that the opinions expressed by each of the people who are on the panel or in this webinar are their own and not to be associated with any particular company, institution, or 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 membership association that they may somehow be related to. And so for the past several years, and at least since the last economic crisis toward the end of 2014, both finance ministers, economists, consultants, and businessmen have tried to look at different ways to attract more foreign investment to Brazil. This situation has gotten a little bit more uh, uh, urgent since the beginning of the pandemic, where certain businesses have closed their doors, and as companies try to obtain additional capital from foreign sources. Uh, Usually, the methods that have been used were typical fiscal and monetary policies at a macro level, together with a company focusing on its fundamentals in terms of its financials and performance. However, as we see today, many of the investors that are more sophisticated, they're looking at other factors. And one of these factors is the environmental, social, and governance directives or programs that are that we call ESG, that are adopted by some companies that have gained a lot of traction in recent years as factors that need to be taken into account in terms of determining whether a company meets certain criteria to be eligible for investments from sophisticated foreign investors. And today we have a panel of experts from Brazil who are lawyers, consultants, economists, and advisors who are going to talk a little bit about these issues. I'm going to start by introducing Adriana Dantas. Adriana Dantas is a founding partner of Adriana Dantas Advogado in São Paulo. She is the head of the Sanctions Committee at the Inter-American Development Bank, and she's also on the Integrity Committee of the Board of Directors of Petrobras. She is admitted in Washington, D.C. and in Brazil, and she focuses her practice mostly on anti-corruption, compliance, criminal investigations, and also representations of the parties in administrative and criminal proceedings in Brazil and the US. We also have with us Maria Beatriz Armelin Petroni, who's general counsel and chief compliance officer of a major company in Brazil that has activities and investments not only in Brazil, but abroad. And she's a graduate of Pontificia Universidade Católica, and she did her LLM at the London School of Economics. We also have with us Maria Eugênia, who is the head of her company, Resultante ESG Consulting, which is a company that both helps companies implement ESG strategies and does analysis for investors of different companies. And we finally have with us Tarsila Ursini, who has been focusing her work on the sustainability level, of sustainability and ESG for the past 20 years. And she's a member of board of directors of both private companies and non-governmental organizations. She's on the board of Corim Empreendimentos, and she's also on the board of Capitalismo Consciente and the Instituto Ethos. She sits on the committees of several institutions in Brazil, including banks and other entities. So the way we're going to start today is we're going to ask questions from each of the presenters, and then toward the end we may have a Q&A. We'll have a Q&A session, where you're free to post your question for any of the panelists or or in general to the room for everyone to take the question. So the first question that we're going to go to is to Tarsila. Tarsila, well, the question is, why should a company focus on ESG issues as a means to either attract foreign investment or as a tool for better management of a company? What are the advantages? What are the risks of ignoring ESG precepts?
Well, first of all, good morning, everyone. Thanks, Mario, for the introduction. It's a joy and honor to be here with you in this webinar, together with my friends that I admire most, as Adriana Dantas, Beatriz Armelin, and Maria Eugênia Buozzi. Well, Mario, before talking about risks and opportunities on ESG for Brazilian companies, I would like to give a bit of context in respect to this complex country, as you already said, Mario. So Brazil is among the 10 largest economy in the world. We have a greatest biodiversity on planet. We are very industrialized. We have huge cities like São Paulo, but Amazon forest, for example, is more than 50% of our territory. We have a clean energy matrix because of hydroelectrics, and we have great potential in renewable energy as well. We have, for example, the largest capital market in Latin America, with a great number of listed companies that published ESG information and integrated reports. We have a strong civil society organization with very active NGOs in the countries. We have also, I would like to mention about our entrepreneur force, especially on positive impact companies. For example, if we follow the B Corps, there is a huge movement for companies of strong purpose companies and impact purpose companies. We have in Brazil the biggest pipeline for B Corps, more than 5,000 companies that are trying to become B Corps. So I believe there is a revolution in special to new generation that is coming here in the country. So we have some island of excellence in some sectors, and companies there is more than 20 years stand out in sustainability issues, such as highly innovative and technological financial market, some industries, some leading exporting, for example, pulp and paper companies, cosmetic companies, food companies, some agricultural companies, retail companies that are also genuinely connected with, for example, human rights themes as well. So I think there's a growing interest in improvement, for example, investors on more sophisticated with ESG topics, as you mentioned also, Mario. But on the other hand, of course, is a very complex country. We have one of the biggest social inequalities in the world. We have a large gap in infrastructure, in education. We have an unstable political moment. We have some records of deforestation this year as well. So speaking of risks, I think we can mention, of course, climate risks that is exacerbated also because our important food and agribusiness sector, such as, for example, increased number of pests, change in rainfall regimes. We have the risk of weakening the role of state in combating environmental crimes, although we have solid institutional organisms like IBAMA, our Brazilian Environment Institute, INPE, our National Space Research Institute, just to mention some of them. Of course, there's a risk of traceability in some companies that may not have an accurate information about the importance of traceability in the value chain. The risk of loss of investments, as already happened with some Brazilian groups. And of course, ESG risks that are also common worldwide, such as the difficulty of attracting new talent, or even the cost of governance, where integrity, ethics, transparency, diversity, just to mention some examples, doesn't occur in the best way. But there are many companies in Brazil. I think this is important to mention, Mario, that there are many companies in Brazil who understand that it is the right thing to do. They understand the opportunities and the value in adopting robust ESG practice in their business. So they are more consistent. They believe that they are more consistent in the long run. They are more resilient, less susceptible to crisis, and they have integrated vision since they consider in the strategic plans all stakeholders, less exposed to regulatory risks, and finally more reliable and more innovative. No. So I can mention a lot of examples. For example, Suzano, which is a pulp and paper giant and the largest agribusiness company in Brazil, is investing strongly in research for innovative solutions for cellulose to replace plastic and bring also carbon and climate change agenda for Brazil. I can mention, for example, Duratex, which is also a giant in the building material sectors, that is inaugurating this year the largest manufacturer of soluble cellulose for fabric in the world. It's a green solution, together in a joint venture with an Austrian company called Lenzing. As you mentioned, Corim, the leading brand in Brazil for organic food in the country, where I have the honor to serve in the board, which has grown 550% in the last 10 years. They lead the Natural Agriculture Committee of the Ministry of the Agriculture. So they are also the main author of the new law for bio-inputs, which substitute pesticides and can convert agriculture, conventional agriculture to natural agriculture. So we have a lot of examples. For example, Simpar Group, also where I also serve in the board, is the largest logistic companies in Brazil. We just issue a bond this week. Is the sustainability linked bond format with more than $62 million, with very high remuneration, competitive, with also linked to targets, carbon targets, very ambitious carbon targets, including also the suppliers and the customers. So to finalize my speech here, Mario, I believe there are many groups of excellence with a strategic vision in Brazil. Of course, it's a complex country, but the investors who really cares about complete returns, as you say, are more sophisticated. That is not only bring economic, but also environmental, social, and governance returns. I do believe that Brazil is a fundamental country for their portfolio strategy and for a more sustainable future that all of us dream.
Thank you. Now, a follow-up question. You mentioned Suzano and Duratex, which are great companies. Now, what distinguishes companies that have a true, that truly mean what they say in terms of adopting these policies or these directives, as compared with companies who may be just seeing ESG as a flavor of the month and superficially implement certain strategies, but without a true understanding of the positive impact of ESG policies?
This is a fantastic question, Mario. I believe that, first of all, a great connection, a great understanding about the importance of governance. So they all of them, all of those companies that I mentioned, they have a strong governance. So if you ask, for example, how is the leadership committed and engaged? They are having executives, variable remuneration and sales force linked to ESG performers. They have diversity on the board. So I think also the second point that I would like to say is the strategy and value proposition idea. So the sustainability is integrated into the company strategy and value proposition. I think very connected to purpose, culture, values, ethics. Also, you can see on those companies, they have material themes on the for the sector and a lot of transparency. So all of them published audited reports with recognized international standards. They have a lot of voluntary commitments. So they have also strong ESG risk maps. They also have very strong culture and people, how they manage health and safety, how they manage the internal climate, culture, internal turnover, etc. Also, they are very onto the supply chain strategy. So ESG is not only something only connected to the core business, but also connected to the suppliers. And of course, climate change, as I mentioned, as a lot, they are very strong on strategy, risks, and committed with connection with climate change. So I believe, Mario, that we live in the era of transparency and action. So they just don't have only just empty commitments. So I think this is what makes them really, truly engaged with this, all of this that we mentioned.
Thank you. Now, since we were talking about compliance and governance, I'd like to switch to Adriana. And Adriana, one of the questions that I have is, in your experience, is it easier to implement or have management and employees adhere to compliance programs when those are of a state-owned or government-owned company, or do private companies and employees and management of private companies are more, they tend to be more willing to comply with a lot of the governance directives or edicts that a company might issue from time to time?
Thank you, Mario. I'm sorry, you are not showing my screen, Mario. And also, for some reason, I cannot initiate my video. Okay, here you go. Okay, thank you. So good morning, everyone. I'm very pleased to be here talking with you. It's really an honor to be here among friends like Mario, Tarsila, Maria, the two Marias, and I really admire that people who I really admire and want to see prospering because of their true commitment to creating a more ethical and sustainable society in Brazil. So going back to your question, Mario, in my experience, and the key promoter of an ethical culture is the top management. So as we say in the compliance dialogue, it's what we call tone at the top. So this means that controllers will largely have a say and a big influence in promoting a culture of integrity in that corporation. As Tarsila said, is an area we need in an era, in a time of action, transparency and action. So what the controllers would do if you have it's a company that has a controlling shareholder, will shape, or they say will shape, the culture of the company, including what the higher and top management do and say. So having said that, having the government as the controlling shareholder of a corporation poses a number of challenges. And instead, in our experience shows, and studies from the World Bank and others show that overall state-owned enterprises, they face governance and compliance issues. So there are a number of state-owned enterprises that faced large corruption scandals. This is not prerogative of Brazilian companies. You saw this in Mexico. You have the issue of Petroecuador, and other European companies that also have faced corruption, were more tolerant to corruption schemes because of the fact that they had a big influence from the government. And also, but for example, in Brazil, we had big cases that were an example, big state-owned enterprises that face corruption scandals, such as Eletrobras and Petrobras, which were forced to change their internal culture because of the magnitude of those scandals, and also because they had to deal and disclose their evidence, deal with the U.S. authorities, the U.S. DOJ and the U.S. SEC. For example, in the case of Petrobras, the company was subject to large settlements with shareholders that were claimed that they lost due to the corruption scheme that was perpetrated within the operations of the company. So in my experience, it's of course easier to promote an ethical culture in private companies that do not have the control of a government. But this doesn't mean that state-owned enterprises cannot do the same. And I believe that Petrobras is really a leading example of that. Petrobras has been I'm not saying that the company doesn't have problems, of course it has, and it's an ongoing process. But the fact that, for example, the integrity, the chief compliance officer cannot be, for example, cannot leave without a saying from the minority shareholders. The fact that the company created the Integrity Board Committee, that is the committee that I am part of to oversee cases of corruption, fraud committed by third parties and its own personnel, and high sanctions apply. We also see cases of conflicts of interests. So it's, of course, the company has put some measures to promote an integrity culture. It's far from perfect, but it's something that there is a large team committed. We have seen issues, and this is public. It's in the papers. It was published at Valor, this big Brazilian newspaper, this week, that the chief compliance officer of the company will soon leave. So there has been a big turnover of this leadership of Petrobras leadership in recent years in the area of integrity. This is true. So this shows that there is a lot to work still, but it's a company that has worked hard and invested in promoting an integrity culture. But an integrity culture can only foster and grow if there is commitment from top management. So it's not what they say, it's what they do. And that's why it can be more challenging when you have the government as the controller. So I believe that, as I said, just to conclude, that Petrobras is an exception, and this is due to the scale of the events, but most importantly, the US authorities play a big role in enable this change due to the fact that they keep controlling Petrobras. They demand good governance. They demanded the creation of the Integrity Committee that I am part of. It's really hard work. It's possible, but it's not easy for sure. It's worth noting, Mario, that Brazil, the Transparency International, has recently released its 2020 report. In Brazil, went down in the score in terms of saying that our ranking, the Transparency Index, is worse than it was last year. So this shows that it's very important to keep an open eye, to continue to work. And in my view, integrity and a strong ethical culture is at the center of implementing an environment and sustainable strategy. Without ethics, you cannot have anything. Without transparency, you don't have anything. And I have been in a position to advise foreign investors in doing integrity due diligence, where I said, don't move forward. And the deal, or said, move forward with those conditions. But you can, like, a lack of integrity culture can really undermine a business or lead a potential buyer to the payment of strong sanctions based on the Brazilian Clean Company Act in case they don't investigate the company very thoroughly and carefully.
Thank you. Now, you've mentioned, in terms of establishing compliance or fostering ethical behavior, you started by mentioning dialogue. Is the process of changing the behavior a question of dialogue, or do you really have to threaten with strong penalties the violation of any of the ethical codes?
Mhm. I believe that the fact that only prohibiting a practice does not stop people from doing it. And I have been applying concepts of behavior science in my work because I am an independent monitor to federal prosecutors. I was the first Brazilian woman to be elected by the federal prosecutors to monitor a company that had settled a case with the federal prosecutor's office to see whether this company, this public health company, has truly moved from the old culture that had a commercial culture that relied a lot on bribery and collusion and cartel towards a company that can move on and have a sound and based business without doing engaging those practices. And something that I really look into is the culture, the underlying culture of the company, because without understanding that the underlying, because you have the culture that is sad, so they say, oh, of course I'm committed to diversity, to ethics, but then the underlying culture is a different one, and you can identify that by checking whether people who engage in wrongdoing remain in the company, what the company has done. For example, when addressing reports of wrongdoing that was brought into their helpline, their integrity channels, did they take proper action against that employee or business executive? What has it done? And with those little actions, we can understand what is the underlying culture of that organization. And if the underlying culture is not one that supports foreign integrity, I don't believe that a rule-based compliance culture can survive. And we have seen a number of studies conducted in the area of behavior science. Eugene Saltz, that is from Harvard University, has done a very good job in showing that culture shapes behavior. It's not the rules, it's culture. So we have to see the decision making process, whether the board takes into consideration ethics in analyzing its next moves, whether there is a reward, for example, for wrongdoing in terms of bonus or not. Tarsila mentioned bonus related to ESG triggers or index. And I believe that having, for example, in engaging people to be their compliance and integrity ambassadors within the corporation, and giving benefits, either bonus or others, so that they can be more integrated to the compliance culture is key. And also allowing the proper resources so that this compliance culture can flourish. It can be in terms of money, financial resources for the area, but also by empowering those who behave in an ethical manner. So in my view, culture, the organizational culture of the company, the shared patterns, the shared values, and how they are, they are, how can I say, they are practiced, they are the examples that the topper management give in practice. This is the key to promote a culture of integrity and not the rules.
Thank you. One final question, curiosity that I have is, do you ever, in promoting ethical behavior, do you ever use I wouldn't call it legalization, but I would call it more of a, do you tolerate misbehavior in ministerial matters that do not amount to criminal liability as a way to maybe to work as a reverse barrier to more criminal behavior? I mean, does it ever work for you to institutionalize some behavior which is questionable in order to get the greater good, which is to avoid anyone from engaging in criminal conduct? Or do you need to start with the ethics and the basic principles that come from management before and be completely intolerant of any misbehavior?
Well, each company or each organization will allege the level of risk that they want to have. And this includes, for example, compliance and legal risk. Corruption has been condemned, for instance, in Brazil since 1940. It's true that we created stronger legal mechanisms in 2013 onwards, but this has been a crime for the longest time. But nevertheless, this hasn't blocked people from engaging in corruption to secure large returns for its stakeholders, for its shareholders. So this is really the more people will avoid engaging in corruption, it depends on the stronger the regulatory environment is. If they think that they are losing, if the company believes or there is an understanding that I will lose more if I engage in doing, they of course stop that, and then they will work hard to develop a strategy that moves away, that changes, that promotes integrity. For example, if you have, I believe that foreign investors play a big role, and also financial institutions in giving financing to companies that are ethical investors. They play a big role in fostering integrity culture in Brazil. For example, at the IDB, in the sanctions committee that I integrate, our main role is to ensure that the money that is financed by IDB, our mission, goes to the right hands. If we don't push for this change, considering that our regulatory environment is not strong and developed as the US and the European ones, without a more broad pressure that comes from investors, from financial institutions, from society as a whole, these together will promote a change. Otherwise, the gains from corruption continue to be high in Brazil. Just to say that during the pandemic, in all the measures that were put in place to enable quicker public bids to buy products that would be used to fight the pandemic, this led to a number of corruption events. So I believe that human beings overall, it's like if you get the example of doing a diet. If you can eat everything you want and remain thin, you won't engage and start a diet. It's a reasonable thinking. So if companies still believe that it's worthwhile to engage in legal practice to achieve high profits, because we have a very weak regulatory environment, and there is no one pressure investors, financial institutions in the society overall, they will continue to engage in those practices because they give high returns. So it's only when they realize that they are losing more than gaining, and I think like public health companies know this more, because the price of their shares go very down if they are found to be involved in a corruption scheme. So there are ways to foster a change, and I believe that those mechanisms are important to enable a country like Brazil that has such a tradition, not only Brazil, but Latin American countries overall, such a long-standing tradition in corruption. And the index of this year showed that we are struggling. We go, we progress and then we go back. We progress and go back. And this has been like that in the past 5 years. Without pressure from civil society and the various stakeholders, we will not move forward again.
Thank you very much. And as we move along, we have Maria Beatriz, who is the General Counsel and Chief Compliance Officer of a Brazilian company. And so, Maria Beatriz, it's for us who are outside advisors and counsel, it's always easy for us to pontificate and talk about principles. But if you're actually in the war zone, which is the job of in-house counsel and a general counsel, especially a chief compliance officer, how do you sell ESG internally if you're under the normal pressure of being in-house counsel and you're next door to your client, if you will, who has pressures of his or on his or her own right to perform and to obtain profits?
Good morning, everybody. Thank you for your question, Mario. It's a pleasure to be here with all of you. In my legal experience, I've been a lawyer I worked for law firms in Brazil, and also I've been working as an in-house for a long time, right? So as a lawyer, we have a responsibility to pressure, business decisions to comply with law, right? I mean, this will save a lot of money in terms of penalties, fines, attorney fees that could be shifted to other investments of the company, such as, for instance, innovation and ESG practice initiatives. So as a lawyer, I mean, I think we can contribute and show the importance first in terms of ESG of the governance. Corporate governance may vary from country to country and also from company to company, but there are some basic principles such as transparency, actions in the best interest of the company, and there are a set of rules that we can establish as lawyers in a shareholders agreement, in a code of conduct, in effective compliance programs that we can push, and we can create a culture, as Adriana and Tarsila said, that enable ethical compliance. We enable another type, a culture shift to move forward an ethical ambience. So to sell it either internally or externally, sometimes we have to show the damage. And social risks, I mean, we're living in a society, in a very complex society. So the challenge for the companies are not only to make money and to be profitable, it's also to comply with law and also to inspire people, to inspire a new workforce, to inspire and to create a trust environment where shareholders and creditors will put money in that specific company. So if you think about all of this, in one side, the shareholders will actually demand for compliance with law, which is Adriana just said, compliance with law, compliance with rules, which will save a lot of money in penalties and reputation damages. And also, we have to look forward, right? We're living, as I said, in a very complex world. So we have to make a very serious risk analysis. And in corporate compliance, we have one of the very important topics is in the board of directors. They have to face new risks. And when we talk about ESG, we're talking about social risks. How that specific company will impact society, right? How that specific company will impact employees. How is the diversity of the board? Is the board engaging women, right? How is the board thinking about future risks? In the past, I mean, about 5 or 6 years ago, we talked about a lot of cybersecurity. There was a major risk. Not a lot of people were paying attention. So nowadays, I mean, what we're trying to say, what we're trying to create awareness is the new risks that all companies will face. The new risks, the ESG are here, and I think they're here to stay. And the executives, the board of directors, the management may be accountable for failing to address these new risks. And society has showed us that this kind of social risks related to climate, related to people, right? They cause a very strong reputation damages. Causing reputation damages, they cause financial damages. So everything is very linked. So if we think about how to sell it internally or externally, we have to show as lawyers what are the risks that management, that board, the top management is facing for failing to act or failing to address new risks that are difficult to address, right?
Mm-hmm. Perfect. And that goes even if both lawyers are perceived, either outside counsel or in-house counsel, as mere cost centers, right? Do you find that management engages and sees the value?
Yes, I mean, in the past, Mario, I think, I think there is a lot of lawyers in the audience, and traditionally, or a long time ago, lawyers were perceived as a high cost. From the moment that we shifted to a new culture, that we turned it like business partners, we can help the business community to take decisions in an appropriate way, right? So this will allow us to look at the past, and we can explain the importance of being in compliance with the law, which in fact will save a lot of money in terms of charges. So if you compare the fees of an attorney with the charges that the company will have to pay for not complying with law, especially in Brazil, we have seen the size of the fines that were applied in Lava Jato and other companies that were involved in scandal. It's just, I mean, they could save all that money, right? And put that money in what is actually profitable for the company, what is key for the company, what is good for the profit, for the product to be sold, to invest in innovation. So nowadays, I think that we are very close to the CFO, to the CEO, and I think this culture shift that occurred in the past years allowed us as lawyer, as an attorney, to be business partner. So it's very important, and I believe that created like a very good ambience for business. And so we can actually make a lot of difference. And this culture shift, it's very important for society, right? And I think it's very important, failure to address ESG risks may put all executives in an accountable way. I mean, they can be accountable for failure to address ESG risks. So the board of directors are accountable vis-a-vis the shareholders. And there's a strong pressure from the shareholders and from the business community, from investors, that compliance is basic. And what else? ESG risks are something that they need to address for the future.
Thank you. And as you see, as you participate in many investments with either pension funds or private funds, you do see a shift in in terms of what their focus is with respect to ESG or the analysis of the investment?
Yes. Just a second. Yes, I think there's going to be a lot of pressure from investors, from creditors, from banks, that all companies must deal with ESG risks. That's something that they will not abandon, because it's just social risks that are extremely difficult to address. So a lot of people, I mean, sometimes there's confusion because, there's a lot of new ideas, and ESG may be considered a new agenda, but it has been for a long time there, but it's just enhanced by new risks. So when you think about the investors, the shareholders and the creditors and the banks and pension funds, they include in their analysis the ESG risks. So when people think about the ESG risks, they can't think about, oh, it's a charity or you're just putting money away. No, it's just risk management. It's very serious risk management. So I believe that the company that will not address those risks will have very difficult access to funding. We have seen in Brazil a lot of issue of green bonds. And I think Tarsila mentioned some companies that issued bonds, green bonds, and in a very, very low rate in terms of interest. So it's good for them. And a lot of investors are actually interested in putting money in what is actually impacting the society positively. So I believe in the short run, some companies will be a little bit confused how to deal with it. Some, executives will think that they're not allowed to put money on the ESG agenda because they think it's charity or because they think they should give money to ONGs. But in the end, they will suffer so much pressure, external pressures and foreign investor pressures, that they will understand that there is a risk that they must face. And also, as I mentioned before, executives may be accountable for failure to address ESG risks. So it's very important that they are aware of this and they implement mechanisms that they put the ESG agenda in the analysis of other risks, in the financial results studies, so to inspire, a better future.
Thank you. And that's a great segue for Maria Eugenia. Maria Eugenia, you were a portfolio manager, you are an ESG analyst. How have you noticed the evolution of the company's practice with respect to ESG in the past few years?
Thank you very much for the invitation. It's great to be here with all of you, all great people in the panel. So I hope I can make positive contributions to the discussion. Well, what I see is that ESG has come from an institutional to a management to a strategic agenda. So in terms of over the past 15 years, I've been working with these themes and this agenda in my professional life, from the time I was a portfolio manager and an ESG analyst in Indian Emerald to now that I am the CEO of a sustainable finance and integration of ESG aspects consulting firm. I have seen that usually executives have moved from a very reactive posture of saying, oh, great things to do, but I'm here to make money, to understanding that they're not going to make money unless they're paying attention to these issues. So ESG has become a proxy for good management. Whenever companies are looking into diversity, employee satisfaction, client relationship, supply chain management, all these issues relate directly to the ability of the company to first preserve its value, so it's not exposed to as many risks. And I'm not going to extend to that because all of the girls have done it so well. So we're all exposed to serious risks in liabilities and loss of market share and lots of different aspects. So it has come from a shift to a corporate interest to now a financial interest. So the shift is now becoming from a risk perspective, now also for an opportunity perspective. And it is being seen as a proxy for good management in companies. Companies that are not looking for that are not good companies to invest, are not good companies to finance, and they most likely are going to have issues in the future. And that is being proved now by first new generations that have new demands. So we have millions of young people going out on the streets and demanding public and private sector to act in the name of ethics, in the name of social development, in the name of climate change. So it's being charged over executives and corporate leaders to do something about it. It is being charged on investors to look into it and to know what is being done with their money. After all, they are also responsible for the activities that they finance, that they invest in. So it is being an overall approach, a serious approach on the market for those issues.
And you're talking both from the company's perspective and from the investors, both domestic investors and foreign investors?
Yes, once the market realizes, it's a good thing to look into ESG issues because of value preservation and value generation. Of course, company understands it and it shifts from a corporate to a financial perspective. And once it becomes a financial perspective, credit operators or investors, institutional investors, and even retail investors are now interested in knowing what is being done with their money. So it's a chicken egg cycle, maybe, that we don't know if the investors are going to drive corporations, if corporations are going to realize it because of demand issues or regulatory issues, and therefore after becoming an increasingly relevant impact, investors are going to look into it. But anyway, it's a positive cycle, no matter the direction of it. What we have looked into it several times is that is a company that looks into ESG more profitable, or is a more profitable company looking into ESG because they have excess of resources, they have more time, they have more strategic assets to look into it. And it's not a conclusive question. And we're still in Brazil. We call it as Tostini's dilemma because we have a cracker to say, is Tostini's good because it sells a lot, or does it sell a lot because it's good? So it's the same. It's the egg chicken dilemma. But nonetheless, statistics are proving now that it's a good business. You can do good by doing. You can do well by doing good. So, for example, among Brazilian companies, Resultante evaluates 160 listed companies in Brazil. And in 2020, what we have seen is that in a not so good and so stable market that we had in 2020, companies that are in our first quartile, so the 40 best companies in ESG, have shown a decrease, of course, in stock prices of an average of 5%, whereas the bottom quartile, so the worst 40 companies, have presented a devaluation of 12% in their stock prices. And that also goes for volatility, that also goes for other financial aspects of the companies. So what we know now is that we have a global agenda on this. It may have started as a fashion trend, then it became a business trend. Now I think it's a reality. I think no company or financial institution can escape that. And it can go both ways. Not to watch this, not to observe this, not to account for this is a risk. It's a risk for losing market share. It's a risk for increasing operational costs. It's an increase in liabilities. And whereas looking into it deeply and in align with your business model and strategy may also present great opportunities for differentiated funding, for new markets and for new demands, and also for talent retention and attraction and everything. So I think there's no downsides on it, actually.
Thank you very much. No, I mean, I'd like to pose a question to the panel. We talk about the environment, we talked about governance and to a large extent, but we forgot, we touched upon, but perhaps we can go a little further in terms of the social aspects of the ESG concept. And by that, I want to talk about you guys to opine on diversity and diversity in the boardroom, not only in terms of gender, but also in terms of race. And so I'd like to put it to the table and see who wants to take first dibs at those issues. And then if we have time, we'll take some questions from the audience. But go ahead, any of you.
I can start, Mario, maybe very, very briefly. Well, it's a fantastic question because Brazil is, we have 52% of women, but 56% are Black. So we have, for example, more than 7% of disabilities. There are studies that also say that we have more than 10% of the population is homosexual. Is the largest African population outside Africa. So we are also aging and increasing life expectancy, reversing the age pyramid. So what we see in Brazil now is like everyone is asking, does my company workforce, does my leadership represent this demography. So what I think, Brazil still does not have very inclusive rates in corporate environment in respect to race or gender in leadership. But I believe that some changes are coming right now. So we clearly see some iconic companies taking a public position on that. For example, in Santander, Brazil, we have 3 women on board of 9. We have almost 30% of women in leadership. We have goals for 40% of Black people in the whole company, and 50% in leadership by 2025. So I'm optimistic that we will move forward and a lot in coming years. And above all, we realize that the value of diversity is a precondition for more competitive and creative companies.
Anybody else would like to complement that?
Yeah, I would like to compliment Mario. I think there are a lot of initiatives, and also from schools, you know, and B3 and São Paulo Escola de Negócios, you know, some business schools to enhance the participation of women, especially in the boardrooms. But unfortunately, in my experience, it's going very slow. I mean, in terms of participation and increased numbers, the percentage of women in the boards are approximately 8%. And if you discount, you know, people that are from the family business, you know, there are some people that, you know, the daughter of the founder. So the number is actually very low. And we don't have in Brazil a law. We have a bill that it's not has been approved. It's been forever there without no pressure from the community. There are a lot of people trying to pressure, but we don't have a bill that is actually mandatory for, you know, companies or state-owned companies to have women in the board, unfortunately. So, and the process of electing, you know, the board members are actually also by indication from the members. So one member ends up indicating the other. So we don't have so many, we have in big companies, but we don't have so many process through headhunters. So I think it's something, as Tarsila said, that it's improving, and I believe so, it's improving, but we need to do better. I think we're not doing so well as other countries that have, you know, other countries that have an imposing a law that has been enacted to promote it. And if we don't have more pressure, it's going to take a lot of years and ages to have more diversity in the board. I'm talking about gender diversity, but as Tarsila said, we have other types of diversities that even more difficult to engage in.
Thank you very much.
Yeah. I would like to no, go ahead. I would just like to compliment. I really like what Bia said and Maria Beatriz said and Tarsila. I agree with everything. But in practice, companies, for example, in my experience, companies that face challenges in implementing integrity culture, they are dominated overall by this traditional male business culture. And there are studies that demonstrate that men really, even one that I saw recently, men, it's more common to see a businessman engaging in corruption or fraud than a businesswoman. We're not saying that's not possible, but you have to be this tolerance to this flexibility in doing business and this more risk-based attitude is more common in men, and to expose the company to corruption issues than in women. Just to say that I hope we continue to change and bring in more women to the spectrum in not only in boards but also in the higher management.
Thank you very much. I'm sorry we're running out of time. I think we should do a show just or an event just on this topic because it's something that's very serious that we have to deal with, not only in Brazil, but everywhere else. So I want to thank everyone for participating, both in person here and by video, and wish everyone a great day. And again, thank you very much.
Thanks.
Thank you,
everybody.
Thank you very much.
It was a pleasure to be here.
Thank you, everyone. It's a pleasure.
Thank you. Very nice talk. Bye.